Hey guys, Steve here from turtlefollower.com with the strategy session for Monday, October 13th. Really hit some selling pressure right towards the end of the day. Middle of the day was trying to move higher, and right around lunchtime, I think we actually were up about 8 or 9 points. And then, as the afternoon wore on, especially in the last hour, we started to get some real negative tick readings, and I think the negative tick was down almost negative 1450 was this tick right in here, and that was at the 3:30 hour. So 3:30 Eastern time. Again, market really didn't have much of a bounce off of what I was perceiving to be some at least short-term support. I was using this 1882 as a level that I thought we would first bounce at. Now looking at it, kind of what we went over in the stock market outlook video this morning, I think we really need to see some kind of buying happen in this range here between 1868 and 1850. That kind of goes between the two highs, one high from 4.4 and then a couple series of highs from the middle of March and then again in the middle of April. So you can see that this level has held and supported. So there's a lot of price trading, price action in that area. So going back to that, I think we would need to see some kind of buying pressure happen in here, or we're in some trouble. As far as the market goes, you could see we're so far extended. Just the similar as it works from in an uptrend. Look how far extended from the 50-day moving average we are. All right, we're almost, the 50-day moving average is still up here at 1961. We're almost 100 points below it on the S&P futures. You could see it hasn't really been that far extended since maybe back here in February, where the S&P was at 1780, or the 50-day was at 1780, and we were at like 1700. So even there, not a lot. So this 50-day moving average has a lot of catching up to do. Obviously, it's going to be acting as some resistance now, but I still think we need to see some kind of bounce out of this area, back at least to the trend line, if not to the 50-day moving average. As far as the NQ, the YM, they also had some terrible days. You could see the NQ has just continued its selling, pushed right through that 38.50 area. It was holding earlier this morning. Then it even pushed through this 38.23, which was the lows from 7.10 and also from 8.8. So again, we're in kind of no man's land here. Next real support level that I see on this is back down here in this 37.50 area. All right, so not too far away. We're only 50 points away, and the way we've been acting, it could really be there in a day or so. So as far as the Dow goes, again, now it's showing up 20 points, but it was down for the day, and look at where we came right into. Where we closed 16,236. Okay, we've talked about this 16,200 area being some support. Okay, using these closes and these highs from July and March, and then also these lows from the middle of April, and again from the middle of August. So we're definitely at an area where it looks like we should bounce. Whether that happens or not, that remains to be seen, but this is where we need to bounce from. All right, so let's go over our positions. Again, this morning we exited Expedia. All right, so that was an exit that was triggered from Friday. You could see Friday we closed below 82.50, and then today at the open we exited, so you could see that was a good exit. It saved us a lot of pain. Expedia closed down almost 5% or almost 6%, down to 76.34. So this is why when you get your exit signal, and as much as it is a pain to take, you got to take it. All right, so Expedia, you could see it's kind of just falling out of bed. Last 3 days, the bars have gotten bigger and longer, meaning that selling pressure and selling has increased. So we did exit Expedia this morning, and one trade signal that we're getting for today for the close is we will be exiting LUV. Now, looking back at this trade, I wish we kind of played it differently, but the problem is hindsight is 2020. I think we did miss an opportunity to raise our stop to 31.78 like we had discussed, but I was really waiting for that breakout over 33.42 to at least break this downtrend line. Sure enough, again, I mean, look at what's happened. I mean, we've gone from $34 down to $29 in a matter of 5 or 6 trading days. So, again, I wish we played this differently. I wish we were able to take some profit out of this stock, because we had significant profits. We were up almost 20% and we gave it back, which is never a good thing. But if we were really looking at the longer term trend, the longer term trend showed that we could really pull back to $30, and that would be the uptrend would still be intact. Okay, you could also see that on the weekly chart. Okay, if we go ahead and draw that trend line in, you could see that we could have traded down to $30 and long-term trend would have still been intact. But unfortunately, with everything going on, we didn't. I would say execution-wise, we were probably, I would give ourselves a B. Obviously, again, hindsight being 2020, I would have loved to get out 31.78 and take the small profit that we had, but we didn't do that. Fact is, we're getting out for a small loss, and kind of a little bit of a cost of tuition type of trade there. So that's the only other one we're exiting today. So we exited Expedia this morning. We'll be exiting LUV tomorrow morning. Let's go over the rest of the positions. You can see here AA, Alcoa. This was our first short position that we put on. Okay, we're using this downtrend line as a reversal. We're using 1633 as a stop, a buy stop, and our entry was based on a close below 1536. That happened on Friday. All right, so bearish engulfing pattern followed by some continuation, and then sure enough today we had a continuation again to the downside. So we did enter this position this morning, and we'll continue to monitor this, but right now 1633 is our stop. Apple still trading right around the $100 level. We're waiting. You can see this is relatively strong. All right, look at these other stocks that we've talked about, Alcoa and Expedia and LUV, how significant the pullbacks have been. And meanwhile, Apple just continues to go sideways. So on a relative strength basis, Apple is definitely the stronger. It is a strong stock at this point, just because it hasn't pulled back. We're getting to the point where if we can hopefully get some actual buying pressure, this may very well break out over 103. Sure enough, me saying that, I'm sure tomorrow it'll probably close under 98 and we'll be exiting. But for right now, I like the way Apple's setting up. It's kind of just holding its own, and hopefully, again, when we get some buying pressure, it'll turn around and break out for us. Costco was one we entered last week. We had these two tails on Thursday, Friday. So even though these tails were there, I was kind of happy with the performance. You could see that this is pretty much only a few percent away from all-time closing highs. So for right now, we're using 120 as a stop level. 124.75 would be our next obvious stop, but we need to wait for that 50-day moving average to get past that level. And also, depending on which trend line you want to use, we're using this longer-term trend line that's down here. This is a more accelerated trend line, so something if you're trading options or have an oversized position, that would be the position and the stop that you'd want to use. But for right now, Costco holding up well, right below recent highs. Estee Lauder, again, this is another short position we took using 75.10 as our stop level. You can see the 50-day moving average is now curling over, now acting as resistance. We used a breakdown under 73.19, which happened on Friday, as our trigger to enter. Entered this morning at the open, and have a nice gain so far. So definitely both two different ways to trend follow. You could either be long only, or you can take some shots to the short side. To be short only, in my opinion, is a very difficult way to manage a portfolio. I really only short positions when I see significant breakdowns in the market, and it really hasn't happened in the last couple of years. So I haven't really been shorting much. So these are two short positions I have, Alcoa and Estee Lauder. Again, I have put options in those. So that's something we'll get into a little later down the line. But for right now in the model portfolio, we are short shares of both of those companies. Home Depot. All right, so you can see Home Depot essentially, it had a nice little breakout on Wednesday and then has pulled back between yesterday and Thursday. I'm sorry, Friday and Thursday, and then today, of course, down 2.11%. You can see the 50-day moving average is still continuing higher, so this may have been a little bit of a false breakout. Home Depot may want to continue trading in this box, but the fact that it's still in the box, again, similar to Apple, to me indicates that it is a stronger stock than the rest of the market, and this is the one that I would want to be owning should the market turn around and start moving higher. So I'm happy with the position that we have in Home Depot, and we wouldn't be exiting that position until we broke down under 88, which would also break us down under the 50-day moving average and this previous lows from the beginning of September. Kroger down 1.87. Again, this one just continues to kind of march higher. It's been moving sideways the last 4 or 5 days since we've entered. But again, sideways is better than down. So relative strength wise, this is a higher relative strength than the rest of the market. And you could see here that eventually, on a little bit of continued movement higher, we'll probably be able to raise our stop to 51.43 being the next level. Right now we're using 50, and we sized our position accordingly to use $50 as our stop. Pepsi, we actually entered Pepsi this morning. I forgot about this one. Pepsi we entered this morning on a breakout on Friday. Okay, so while the markets were down, Pepsi was green on Friday, again indicating some nice relative strength. You could see Pepsi still holding above the 93.82 level. You could see here as well that the highs in Pepsi have just kind of stair-stepped down a little bit. But look at what's going on. We have this big bearish day on Thursday. Friday traded inside of that, and today was actually almost inside of that. So as far as consolidation wise, this is another form of consolidation. Okay, the whole bar from Friday is inside Thursday, and the whole bar from today is inside Friday. So again, another form of consolidation. It doesn't have to necessarily be a long-term consolidation like this. This just basically saying that it's working off some overbought conditions possibly and getting ready for a move higher. So again, with Pepsi, we're using $88 as our stop level. Again, if you're a little bit more aggressive or potentially trading some options, you could be using 90.85 as a stop level. Eventually, we'll be able to also use 92.54 as another stop level as Pepsi continues higher. And the last one, RSG. You can see this is setting up for a potential short position. What's happening here is you can see this downtrend line is intact. The 50-day moving average is starting to roll over. So a breakdown under 37.86 would be a nice trigger to enter a short position in RSG. Again, we would also do that with shares, and you can see maybe the first target that we would have would be 36.80. Now, when we are short a position, I tend to like to let it run, but I've also seen the benefits of using a target. Okay, since it's different than when we are actually moving higher. Okay, we're moving higher and we're at say all-time highs. We don't have any price action to reference against. As far as when we move down, okay, what happens is now we have some price levels to trade against. So you could use 36.84 as your first target, and then say 35.24 as your second target. The fact is, the stocks will go down quickly, but 9 times out of 10 they're not going to zero. So it's a little bit different than trading to the long side. So we're probably going to be using some price targets if we continue to get some continued downside movement. I'll also make those aware to you guys. I'll make you aware of them in the upcoming videos. But for right now, RSG looks like a good potential short, and our first target would be 36.84. And when I say target, it doesn't mean to necessarily take anything off at that price. I just may tighten up stops very quickly if we're trading around 36.84. And then again, if it moves down to 35.24, then maybe at that point, let's take some shares off, especially if we're going into earnings. I will not hold a short position over earnings. It just doesn't happen. I don't hold options over earnings, and I will not hold a short position over earnings. So those are some different rules, and that's why I say to you, if you haven't shorted before, I know we haven't gone over it, but I'm just kind of making you aware for those who have shorted. These are some good setups. If you haven't, cash is fine. Cash is a position. I use cash for a number of years. I never shorted a stock, and I made out just fine. So it's just another way to generate some income. And again, it's a little bit different than trading to the long side, where we will use price targets and not hold over earnings. So the whole 2 week before earnings deal doesn't really apply in short positions because I'm taking it off before earnings go. So far as positions go, again, I'll give ourselves a C. I think we do have some good positions that are holding up. Again, I kind of wish we traded LUV a little differently, but hindsight 2020, it is what it is. Let's learn from it, move forward. Now, as far as bullish positions, there wasn't any on the watch list that were up, so we're not even going to look at those. Alcoa and Estee Lauder we actually entered, so we could take those off the list. The only other one that's somewhat intriguing to me, and it's really not, so I don't really want to take a position in it. There's two, GNW and Win. Now, we broke down today, but the way I look at this is the market's been very weak, and what happened with this is it just went sideways. So to me, that kind of tells me, hey, you know what, this may not be as weak as I think. And I'm not looking to put on all these short positions. I'm just really only taking the best possible setups, and I'm okay with leaving the remainder of the money in cash. So unless there's a setup really screams out and says, hey, this is a really good looking setup, I'm not taking it. So GNW, again, it's a good looking setup to the fact of if you want to take it for a couple points, maybe you can get it down to $11. Go ahead. For me, it's not worth it. And the other one, Win, down 1.85. Again, nice looking setup down here. But look at what's happened over the last month, when the market has really been kind of falling apart. This just went sideways. So I think today, again, if it was earlier in the cycle where the market was really just starting to break down and this was breaking down with it, I would probably take this trade. But, you're more than welcome to take it. 189 would be obviously your buy stop. I enter at the open, you're risking about $16, a little under 10%. But the way I look at it is, maybe it's not the best setup for us right now. I'd rather just stay with those couple. Let's kind of explore those, how we're trading those with Alcoa and Estee Lauder, and not really try and build a short portfolio. So again, good looking setup, but one that I'm going to pass on. The only other one on our bearish list is WFM, and you can see that has just continued to go sideways. So again, as the market is falling apart, this has just gone sideways. So at this point in the game, I would rather see stocks like an RSG, if we were going to take it to the short side, where it's obviously putting in some lower highs, starting to trade below the 50-day, and really just starting to break down from its trend. Those to me are a little bit more tempting than the longer term downtrends. Just at this point, if the market continues, was going up and these stocks were continuing to go down, that's a different story. But the fact is, the market has really just been annihilated the last, I would say, 2 to 3 weeks, and those stocks that we were looking at were just going sideways. So similar to an uptrend, we don't want to really we don't want to be short the strongest stocks. We want to be short the weakest. So I would say for right now, RSG gives us a nice opportunity for maybe our next potential if we can get a breakdown under 37.86. And Expedia probably offered a potential trade too, but we're not going to take it either. You could see here, the breakdown under the 50-day. But I would have liked to see maybe a consolidation and another breakdown. So as far as tomorrow goes, let's hope we can see some green arrows. Let's hope we can get back into positive territory. But if we can't, we're managing risk. Again, we're going to go through downturns. We're going to go through drawdowns. And it's just part of the game. The fact is, if we can keep our portfolios close to those highs, close to, and not, the amount we started with, then we're in good shape. So that's it for tonight, guys. Thanks for watching. Please follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel, and we'll see you tomorrow. Have a great day. Bye.